Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past 1 p.m. here, making it a couple of minutes past midday UTC. A really big shout out to everybody watching the stream live today, as well as all of you that watch this on recording. And thank you all so much the last few weeks, especially lots and lots of amazing messages coming in from you all. So just wanted to kind of start the show and give a little special mention for that. Really do appreciate all of the messages, all the people that have come in over the bird nest, and it really is our pleasure to kind of share this information with you. I think everybody that's been on this kind of journey has had those people around them, and hopefully we're those kind of people for others, sharing experience, our knowledge, what we know about the markets, what we've been through. And believe me, as professional traders, you go through the mill a lot, right? And you mix that in with something as volatile as cryptocurrency, and it's just really nice that that's been helping like a lot of you guys out. So thank you so much for that. The Alt Request Wednesday show has just been absolutely massive recently, looking at all of that and covering all of those assets. So really great to see you, Craig, back on the correct time. Actually pushed today an hour later. This bloody UTC thing, man, I tell you, daylight savings killing us all. Tim the Chin, hello, mate. XRP breaking out yet? We can certainly take a look at that, my friend. Let me just make a note of it, and we will dive in shortly. We'll take a look at XRP. We're going to take a look at Solana. Obviously, ETH. Start with the beast that is Bitcoin. But before we actually get in on that, what's really, really, really important this week is, from a news perspective, is we've got quite a lot going on and we have a very short week. All right. The reason for that is because of the US and a lot of other countries as well, Corpus Christi. So we've got a shortened week, a week packed full of potential volatility, right? So we really want to keep an eye on that. And why do we expect it to be a volatile week? So let me just share with you the news calendar, and we're going to take a look at this. Obviously, our focus is very heavily on the red folder news. We have monetary policy statements. So this is where the rate setting comes in. Think of it obviously like with FOMC, which typically is what you'll see in the space. The reason for that is the US is the biggest market in the world. It's also the world's reserve currency, which is the dollar. So things that affect the US have a far and wide impact on many other countries, or all countries, really. Now we have Japan. I'm not going to make this too much about the FX side of things. I know this is very much a crypto friendly show, but Japan is a really, really interesting one, not just as a proxy to what it is used for in traditional markets in terms of whether we're in a risk on or a risk off environment. They obviously had zero rates for a long time, hiking them, and then the uncertainty came in around the tariffs from the US, which caused a little bit of concern. So understanding what they're going to do, and negative rates, and we can see on here, in terms of what the projections are. So this is tomorrow. We have this coming in. The one thing that we do have today is the Empire State Manufacturing Index. Don't expect that to really kind of do too much with the markets, especially with the horizon that we've got. And if we take a look, which we will shortly, at the charts, we can see that the week has opened quite bullishly for risk assets, which is interesting. We've got a lot of liquidity to the lows. Maybe the market's kind of really digested quite quickly the escalations, the sad, obviously, escalations. I'm not going to make this a political show, but just heartfelt message to anybody that's kind of caught up in any of those world conflicts at the moment. What what a very, very sad, another very sad day for humanity, I think. So ultimately, we're controlling what we can. The markets are incredibly good, efficient, and quick at pricing in the impact of these. So the fact that we haven't seen probably a bigger dump in risk is quite interesting. The fact that we've seen the market start quite positively today, but we do need to remember, we're only 30 minutes away at the moment from the pre-market open in New York. So when the US markets fire up, it's going to be interesting to see what happens to that kind of early morning risk bid. We've seen a calming in the oil markets as well, which has been interesting here because obviously escalations in the Middle East normally means that the weaponization of oil production comes into play. So there'll definitely be a watch on that. Obviously, the fears of that are, piling up the inflation pressure. So just back to the news to finish off quickly. Obviously, we had that today. Tuesday's the real major one that we have. We've got the Bank of Japan, the BOJ policy rate coming in, but also in the US markets, we can see here we've got core retail sales month on month and retail sales month on month. That's going to be a real indication of, the impact on the economy. Are the US citizens spending? Is there enough, flexibility in the purse strings there that is coming into the retail sector? It's a really kind of good gauge. Another gauge that we use is the health of the economy. Wednesday, we move through. And we have the US major news dropping FOMC. Right now, it's predicted, heavily priced in, that it's going to be a hold. In fact, they think it's going to be a hold across the board from all parties, considering the unpredictability of the current economic landscape as well as geopolitical. So any move either way on that, I think, could really have some kind of impact. But at the moment, it looks set to be a pause on rates there from the Fed. And then obviously we need to kind of look towards the press conference and then look at the tone of Powell during that. Is he overly dovish, overly hawkish? Just because they haven't moved the rates, then there will just be, eyes and ears are all going to be on his tone during that conference. All right. Thursday, we move through to my once beloved country of Great Britain. They really need to delete the great out of that, unfortunately, these days. But monetary policy summary, so Bailey and his cronies, whatever they're going to do there. Again, pause is most likely, but this, Britain couldn't be becoming less impactful on the world environment and economy, which is such a shame for what was such a good and proud country, especially from a financial standpoint. At one point, our biggest, export was financial services. So anyway, we then need to remember Thursday, Friday, you've got that major public holiday coming in. So really not expecting a lot to come through here. So all eyes on Wednesday, basically. I won't really kind of spend too much more time going over that. I know you guys want to see the charts, but that's where we are. So we do have a volatile week. Obviously, there's earnings still going off at the moment. So do make sure that you've got at least an eye on some of that. So, it can really, really help you kind of navigate this landscape. So where are we from a technical perspective? Well, fundamental drivers aside, this is what I mean about Bitcoin holding up pretty well. This is the weekly chart here. This was exactly the type of reaction I wanted to see when we dipped into the weekly gap here. The way that I'm looking at prices, I'm looking for strong reactions at lows or highs where key liquidity pools are lying. And then once we see those reactions, often these imbalances, right? So the failure of order pairing that creates these gaps, 3-candle pattern, it's the high of candle 1 to the low of candle 3. Yeah, or if you're bearish, then it's the low. Let me find an example here, right? The low of candle 1 to the high of candle 3. All right, we're looking for those gaps, especially clear and obvious gaps. This is a really good area for buyers to step back in along here. So as we were looking at this, the other thing you'll see on the chart here is obviously this slope resistance line. These last few on the highest time frames have just been so very, very clean. We can see here, if we stick on volume as well, you can see on this breakout here, the nice rising bullish volume that we had coming in here. And it wasn't just this candle when people say like, oh yeah, by the time you're using your volume, it's already broken out. No, look, we had rising volume all the way from here. Yeah, look how all of these, we're focusing on the green candles here. And if you ever want to do that as an exercise, some people will just take into account all the candles, but I do really like to look at that. So if you want to do that as an exercise, you can just go in here, right, on something like this. This is just a volume indicator. And then you can just turn them off, turn the red candles off and say, okay, what's happening with volume here? If we want to see a breakout, you typically want to see a breakout with volume, right? So as we're taking this through to here, the candles I'm really paying attention to in terms of the volume candles here as price is coming through this area. So this one, this one here, right? And you can see this is before. You can see that even before that one here, we had a very clearly defined rise in volume. All right, so as we look at those across here, and that just helps back up the idea of the breakout, right? We had a similar situation down here, but we only had 2 candles in this area. Then price kind of dropped back. We saw some red candles coming here. Then price slowly started to kind of build here, but we didn't really have that same momentum, all right? Again, nothing is ever guaranteed in trading, but if you want to see volume kind of stepping in at those levels, that's definitely a good thing to watch out for in terms of confluence. But apart from that, the only other thing you'll see on here is the previous all-time high here at 109,998.9 on OKX. And what I'm really interested here as well is how we built this base. These down closed candles then got disrespected when price really ripped through this high volume candle in terms of looking not just at the volume from the metric below, but also the size of the bodies here. That's where the trading is done. The wicks are what price attempted, the bodies are what was achieved. So as we start to see this up here, we can really see the indecision set in the last couple of weeks doji candles here. But this was a nice candle. I like this one because we dipped in to a key area. We're bullish overall. We've seen an initial rejection at the prior all-time high, which was to be expected. Price drew back here and gave buyers a brilliant opportunity to set in. Now, we did see a strong rejection here on a weekly scale, back again in the area of the prior all-time high. Now, we had a very news-driven, volatile week last week, of course, from a geopolitical sense, as well as the fact that, you know, these tariffs and bits and pieces aren't really kind of washing through into the data yet. So there is a little bit of caution in the markets. But we just want to trade what's in front of us. So if the weekly is your highest time frame, for me, what I'm saying to myself here is, how are risk markets behaving? We can see if we just go down to our risk markets here. By the way, for anybody that does trade the contracts, please remember that the current contract has now changed. The expiry is on the 16th. So we're on to the new contract here, which is N if you're on NASDAQ, ES, or YM, which are, you know, the NASDAQ, the S&P 500 and the Dow Jones respectively. We're now on the NQU contract forward facing through to September. Anyway, besides that, if we look here, we can see a positive start this week for equities, or I call them equities. Technically, they're not, they're indices and indexes, right? Meaning that the risk bid is underpinned quite well. We've seen the VIX start and really kind of fall away. That represents the puts that are opening on the S&P 500. So people actively taking short options is dropping back, meaning again underpinning the risk bid. And the DXY as well is pretty flat, but down on the day, 0.16%, right? Gold too is down. Just trying to feel out the market at the moment as a risk proxy. Oil as well. So it looks like the market has room to breathe. We're seeing an increase here in the bond yields, which is kind of a little bit of a different story. So really not one for now, but kind of looking at our, you know, correlated assets here in terms of whether we think the risk bid can be supported. At the moment, it's looking pretty good. So let's drop down and start finding some areas that we can start to look for some setups. Now, something that's kind of, I would say, concerning me here on the daily scale, if we put on our daily levels here on Bitcoin, we can see there's this area here, right? What is this? This was a bullish gap. Again, look at how we treat gaps. We're looking for those nice expansion moves higher that leave the gap, showing you that buyers are stepping in. We had a beautiful reaction at this weekly level. Like I said to you before, we also had equal lows resting down here, key liquidity pools. All right, we sweep that. We see a nice wick recovery here. We get this beautiful large bullish candle here, ultimately leading to the breakout. Now, obviously, this was a key area here, and engaging with the prior all-time high. Again, we can see price break down here. And ultimately what happened is we've left equal highs resting above here as well. Now, equal highs are important because they're really key liquidity pools. They can be seen as support and resistance. Typically, we know and we understand there's liquidity below those in the terms of stops. So they're areas that can often be targeted. Now, with this bullish gap, this, you know, if the bullish case was going to continue, we would expect this kind of area to hold and then lead to price driving higher. Obviously, price not being considered fair value above here. Price has now broken down, closed back below this bullish gap, inverting it. That's what makes the box purple. Typically, you'll see regular gaps as gray on my charts. The close of this candle here, because we did have this dip down again, a really, really super bullish reaction down here. Look at the length of the wick to the downside, right? That's price desperately trying to get forced down there, but buyers just kind of grabbing all of that back up. Now, I really fancy June's low here if we were going to break down further. Ultimately, at the moment, we do have the collection of candles here. It is a little bit large, but consecutive or singular bearish candles or black candles in these cases, or down closed candles. I look for the body of these areas here when we have those strong breakouts, especially if we've taken liquidity, for these, you know, to become areas of demand, right? Order blocks. So price dips into here. We saw the buyers really stepped in aggressively. We failed to really see any kind of follow through on this, but price is sticking up here. And when we have really clear and obvious liquidity resting lower, this for me is showing strength at the moment. But what we also have at the moment with a bearish gap being created here, right? let's draw this in and just do it in red just so you can see it, is we have this balanced price. So you've got a bullish gap here, bearish gap coming through this here. This whole kind of area for me, until we start closing back above this, is more likely to represent resistance than anything else. All right, so that's what we're looking for. Now we're just going to turn that away because this kind of box here really kind of covers over and represents the area that we're looking at for rejection. One of the other things that we can do here as well is we can put on our moving averages. All right, if you are somebody that utilizes moving averages, we can see that ultimately they're still underneath price, the 200 period moving average, which is obviously one of the most popular. We can see still underneath price. 9 and the 20, very, very close. But we're ultimately, when you're in an established trend, we're looking for these kind of shorter term moving averages like this. You look for the longer term in terms of the 200 to make sure an underpin, right? When you come from these areas of sell off where you see price with the this is the EMA 200 flattening out here, you're seeing this consolidation. Then what you want to wait to see is the uptick in the longer period moving average here, which we can see. And then look what happens when you use these shorter term moving averages here. You have this strong breakout. Again, you can look for your volume. This was a beautiful breakout here, actually, because look at the rise in bullish volume here. Rise, bang, nice. Then we're looking for this to fan out a little bit, looking for the gap between these areas to just support price as it moves higher. And as long as this continues to tick up, remember, it's a long-term moving average, it's 200 periods. So on the daily, it's looking back 200 days. So we're still quite a long way away from this at the moment, but ultimately it's not flattening out. It's certainly not trending downwards. We can see a nice gap between this, but we can see the similar effect happening here. With our shorter term moving averages, they're just compressing in this space at the moment. What we want to see is something like this, where we get a really clear breakout. We're not going to have the cross with the 200, obviously, because it's just too far away, but we can still see we can get these. These are, you want to see the shorter one, which in this case is the green one, and then the longer one, which is that. This is the 9, this is the 20. And then we can want to start to see these start to fan back out. You'll see this big kind of move higher. Then we want to see that. We want to see the green one remain on top. Yeah. And then we want to see the red one remaining on the bottom. And this is very much, how most funds and bits and pieces will be looking at price to be in an established uptrend. You want to be trading momentum. You want to see healthy price action. So that's what we'd be looking for just on a moving average perspective. It is something that I use, a lot more in traditional markets as well. But I did say that I'd start covering that for some of you MA crew out there as well. Ultimately, I don't want to have too many things. I don't want to have too many thoughts and processes in my head. What I really want to do is kind of just take a snapshot and say to myself, okay, if I'm using the weekly as my highest time frame, I'm then most likely going to be using, say, like a 4 hour to really kind of dive in, try and decant the charts down further before looking to execute on a lower time frame. That's where I'm trying to kind of gauge my entries. But I'm taking and digesting a lot of fundamental information as well, a lot of macroeconomic data to try and find those areas. I'm not just looking at a chart and saying, here's a box, let's just short that box. We want to see everything line up and take our high probability trades. So that's what we're now going to break down into. I'm going to look at the 4 hours. Sorry, just to finish that, remember, we've got this overhead resistance here on the daily. The risk bid is in and looking quite good. So we could ultimately look to push up a little bit higher. Now, if I'm looking at this on the 4 hour, which when I'm intraday trading, the 4 hour represents my higher time frame. I'm always aware of what's happening on the daily and the weekly, but this for me is my bread and butter for intraday plays, because the daily and the weekly are just a little bit too long. So looking at exactly the same principles here, thank you very much, TA, very kind of you. Then, we've seen this, price has come up, close back below. This is an area we expect resistance. But on a 4 hour side, I really do quite like how price action started here, because we've got this inversion, right? In the same way that this is offering resistance, this should be offering us support, because it's a bearish gap here. We now close through that beautiful bullish run, and look at the momentum coming through this area here. Yeah, really, really, really clean. So the reason I'm going to get rid of this for a moment, just to hide it, is because price has worked its way into the gap up here, but it's rebalanced it to here, right? What do I mean by that? Well, if the market's being pushed back to this area to rebalance these kind of areas, then what it's done is rebalance the orders to here. So we've got the area has been made efficient within the higher time frame gap. So if I'm looking for intraday plays today, just for example, we've now got this bullish gap below us here. I'm just going to do it in green for you guys so it really stands out, right? Now, I know I've got clear air up to here. If I still believe that the risk bid is value, yeah, and those economic factors are going to stay in place, then this for me is a really good intraday trade, because drawing down into this gap here, we can see we've got support below. We've had a high momentum bullish start to the week. We've got 10 minutes until the market opens, so we are going to actually, or pre-market open, so we're going to sit through that together. And we can see how some of these plays might look to take shape. Okay, so with that in mind, would I be dropping this any lower if I really don't have much clarity, if I really can't frame the trade, particularly when on the 4 hour? Obviously, we always want to pay and give homage to the higher time frames, right? So let's say, for example, there's this on the hourly. Well, I'm not as interested in this on the hourly here because I have such a clean plan here on the 4 hour. Drawing down into this gap, moving higher, what would make me change my mind on that would be closing back below this, inverting this, and then these lows start to look really, really tempting for price. And as we know from our higher time frame, we have room to move to the downside. We've got this beautiful low down here that rebalanced these gaps. Buyers stepped in here, so this will be a nice draw on price from a liquidity perspective. We also have these other lows creating this kind of cluster of liquidity, which will be a real draw should we start to violate these areas that we're expecting the bid. Okay, so where we're expecting the buyers to step in. Okay, so that's where we are with Bitcoin at the moment. Ultimately, we've had a nice bullish start. We're looking at that, but we really are going to be looking towards things like the NASDAQ, and to see how the US markets are going to really kind of treat this, because, the major run has happened in Asia. And as we've seen a little bit recently, if we kind of go back onto here, we've seen some key examples. Here's one over here when Asia really kind of ripped the price up overnight. Yeah, really nice, big, beautiful price action coming in here. Ultimately, we then saw London come in here, and then when New York came in, that really kind of sold off again. All right, and we've seen that a few times recently. Another example being in here, some really kind of erratic price action. Now, doesn't mean that Asia can't underpin that risk bid. Far from it. One of the world's biggest and strongest economies, right? But the New York Open, the US markets are going to react to what's happened in pre-market. So we're going to look at the hour for the pre-market open. Then obviously in about an hour and 8 minutes from now, you have the actual market open. So that's where we are at the moment. So what am I doing? I'm just looking on here and I'm saying, okay, if we want Bitcoin to play along today, then realistically, we obviously want to see strength in the aligned risk markets as well. As I'm looking at this on the daily, we can see price really kind of balanced in through here. Again, I'm looking at this a little bit more as an intraday perspective. And if I'm saying what's kind of capping price at the moment, it's this. All right, and why is this important? We've got a big bearish gap here. All right, price drawing back up into this, seen an initial rejection. I was quite surprised at expecting price to kind of come back down here for these equal lows, but they very well could still do. So when we see the news catalyst and the driver come in and the dust settles, let's see what we've got in front of us. We could be in for a slightly benign week this week while people are waiting for the rate decision. But as it stands here on the NASDAQ, I'm still very aware of this gap. If we start closing above this here, I'm looking for this area to be drawn back to and treated as support. If we then get some good buying opportunities in here, I think we can move this a lot higher. So in terms of this wrapping itself around some of the others, let's actually start today with XRP. Yeah. So Sledge, hello mate, I didn't see you sneak in there. I hate you here as well. How are we doing, guys? Obviously Craigie boy. Yeah, let's take a look at XRP, shall we? Tim the Chin mentioned this earlier about it breaking out. So let's see where we are here, shall we? I don't think we've covered XRP in a little bit. Obviously, we had massive news here with the Ripple lawsuit. This was kind of an area we were looking to play key areas of absorption here, demand and supply, kind of bouncing about through here, kind of lost out on a little bit of momentum recently. Let's extend these out, and then we can just check on their relevance as we kind of move a little bit lower. So this is obviously on a weekly scale, not really too much to see here. Price basically coming up, looks like it's just creating a gigantic bull flag at the moment. Yeah, or looks like a pretty nice triangle pattern as well, doesn't it? But by the by, price ultimately on a very, very long-term scale is compressing. We did see that earlier run. Moving on to the daily. The reason we were looking at this kind of area was the absorption down here from this wick. These wicks were just such a great buying area. Look, great buys, great buys, great buys, great. Deviation below, yeah, no problem. Back above, look how it held this area perfectly. And again, more, good buying opportunities coming in there. We haven't quite run back down to these lows here. So there's probably a fair sign of strength here that, we've got the lows here, we've got equal lows resting down here. Price seems to be holding up quite well at the moment. But let's take a little bit of a closer term look here on the daily. What's price currently doing? Well, it's currently trying to regain market structure, right? That's what it's trying to do, bullish market structure, because we've gone from setting, a lower highs, lower lows, lower low, lower high, lower low, higher high, higher low. Yeah, so let's move this back and change this one here. It's got that first kind of, sign of bullish intent, shall we say there, or actually it would be better served on this one here, but yeah. This is where we're kind of looking at this here and saying like, okay, nice strong close above this, and let's see if we can kind of turn this area into support. And then I really think that XRP can start to run here. Remember, this is on a daily scale. The other thing that we've got currently kind of holding price action back is this gap, a little bit similar to like what we saw with the NASDAQ, right? We didn't really have any key liquidity swept below, which is always a little bit of a concern for me. If we look back across here, typically, these resurgent moves, you see liquidity down below here. It gives us a nice gauge as you see that reaction. Price moves up at a key point of support. Again, point of support down here. This price dipped down, took out the liquidity below this with a quick reaction back above. And the same when price starts to break down. Yeah, we engage these key highs. You see a very strong breakdown from here. This was an interesting one. Price kind of had this large expansion above here and was trying desperately to hold it, looking at the downside wick showing absorption. But then, ultimately we fell away, leaving all of this liquidity intact above here. So in terms of actionable plays here on XRP, I'd want to see a daily close above this, again, inverting this. And then I think price can really start to have a run. Initial targets on here would be in and around 2.4801. That's if we close above this gap, yeah, on a daily scale. Looking at this a little bit more aggressively on the 4 hour, we can see we've had that kind of nice resurgence step in here, right? Again, we saw Asia really just foot down on the bid aggressively. We've seen that really start to pump. A few thoughts on this. We've got a little bit of fiscal stimulus in Asia, or a lot of Asian countries at the moment, mainly China, who are the key driver. So that is kind of bringing a little bit more of a risk-on sentiment to those markets. Not to say that they will kind of not factor in, the US response, as well as obviously Europe, all the other traders that kind of sit into those sessions, Australasia, etc., who align with them. But ultimately, if this is going to sustain, we don't want to be buying into this rip here anyway, right? Like we said, we've got a daily gap here that's been rebalanced now. We need to see it closed above in order to see it used as support for price to move higher. Yeah, because what are we saying? Well, we're asking ourselves whether it's a couple of people with a huge amount of capital or whether it's a number of people with a smaller amount of capital, however you want to see it, the idea of buyers and sellers stepping in is often the cleanest way to think about it, in my opinion anyway. And I just want to see the strength from the buyers here. Ultimately, if I'm wrong and price comes back down below here, then I'm really confident we're going to come and take out these lows and at least make our way down towards this support. So don't be worried about losing trades, right? Position yourself well, make sure you're kind of using a consistent strategy and approach, manage your risk very well. And moves like that can often give you really, really, really good insights into what prices, into what move is going to happen next. So let's say we close above here, take some long positions, the market tanks, gets back down below this level, violates the plan. We know we've got stacked liquidity resting down here. The chances are very high that the price is going to get pushed into those areas. They're the areas that smart money or institutions or, the better grades of traders are going to want to kind of sell at, because they know the liquidity pools are going to be there. So if you've got a large amount you need to offload, you need to do it in a smart way and you need to be targeting these key liquidity pools. So fine, we might lose a trade up here, but it means we can step into one on the other side. And if we've got good risk management, we understand our risk to reward. That's how you can just grind out a career in this industry. I think there's no bigger misnomers in this industry than the kind of get rich quick one, especially in crypto. Ultimately, it is a very, very difficult game trading. And one of the reasons it has such a high failure rate, and I've seen some exceptional traders give up this game, is because it is just, it's a very long, very involved process, right? It's not often what you see on places like Twitter and X where people come in and they're overnight millionaires. They're the outliers, right? But if you understand your data, you understand your system, your strategy, you back test it, and you find a way to comfortably execute that, and over time, I'm a firm believer that traders are made and not born. So really clear plan here. So I don't really need to kind of dive down much lower on that. And the reason for that is as I go to the 4 hour, I've just got this really large expansion. If I was somebody looking to get involved in XRP here, like I said, I'd wait for the daily close above. However, if price did get, we closed this out, hasn't closed yet, we still need to wait another 3 hours, 29 minutes. We get a nice 4-hour gap like that. And remember, that's not valid yet until this closes. Well, after a nice expansion, the reason the term buy the dip exists is for that exact point. Now, just going to quickly, before we go back to XRP, just going to flick over here and onto a 1-minute chart here and just look at the initial reaction here from the New York pre-market open. All right. Now, yes, we're on a 1-minute chart. The reason for that is because I just really want to see, the volatility here. Are we getting the big moves up and down? If we look back, on, I can't unfortunately because it's the forward-facing contract. So the current contract, I will show you some other examples. But basically on these big kind of news days, and the reason is this is the first tradable day of the new contract, you often see these really big upside wicks and downside wicks where liquidity is swept from both sides of the market before it kind of settles back in. Now, because we don't have any really key news, and I say that's no disrespect to the Empire State Manufacturing Index, they forecast minus 5.9. It's come in at minus 16. So it is a fair mix. This is it's an index based on they survey manufacturers in New York. All right. So typically you want a higher number than is forecast, which is good for the dollar. Again, it's one of these kind of metrics you're plugging in to check economic health. All right. So businesses are normally the fastest to react to market conditions. So they're looking and kind of feeling out the sentiment to kind of forward, you have forward facing indicators, you have backwards, you have lagging indicators like moving averages and stuff. This is one of the things they're doing. And I think it's about 200 or more manufacturers that they survey. And this provides really interesting information. However, we have seen some very kind of volatile moves. The print in May was very close, minus 8.2, that came in at 9.2. So, ultimately this being worse than it is kind of a little bit of a sign of weakness here. So we would expect to see the initial sell-off, which we've kind of got coming in here, but not in any real super aggressive volume at the moment. And I don't mean in terms of like the volume as in we're measuring, but just looking at these really big moves, these really high impacting moves. Now, if I move, and you're going to have to accept some apologies here because these are going to be some messy contracts, right? I've got annotations all over these because I typically teach off of these charts as much as anything else. But if we go back and we can look for a high volatility news day, a good example here, right? This is the pre-market open. This was on Friday. The news came out positive, and look at this thing, just absolutely tore away. Now, quite often you'll actually see a false move. So you see the market draw down here before recovering and moving higher, but look at what happened here. Again, I know it's on the 1 minute, depends what type of time frame you trade on. Price is ultimately fractal, but this is what I mean by really big news catalyst. If we then overlay that with what we've kind of seen this morning, we can see it's a little bit more benign. This was the pre-market here, and see what I mean. Price drew up just a little bit, came into this inefficiency here, failed to close above it, price then moving down. The other thing that we did here, you hear me talk about these a lot, one of my favorite kind of signals of a show of weakness here, just to show you that we're not just looking at these on the highest time frames, but obviously on the execution time frame as well, is this when we close below that really clear and obvious bullish gap. If the buyers were going to step in here, this is where they had the opportunity to do it. Price really did kind of have a really nice big bodied candle, what I would call a strong close below this area, meaning that we expect price to run out to the next key point of liquidity, which would be the low within this gap. Now, I'm not saying you would take this trade here, but I'm saying if we look at what we've been discussing on the higher time frames, we can see the logic reflected here on the lower time frames as well. So just wanted to kind of watch that out with you. I know the show's normally a bit earlier than this. We do these live trading sessions. We trade these instruments live with members Tuesday, Wednesday, Thursday on crypto and on the NASDAQ and on the S&P 500. But on a Monday, it was quite nice to do a little bit of a later show today so that we can kind of see that immediate move off of the open. Now, the big question here comes in, okay, well, we were looking to counter this. We don't really have a great clear and obvious gap here. But if price was going to recover this, and this is actually the deviation here, Price then showed strength to get back above this level. You'd have to be asking the question of, okay, well, if the news favors the bears, and the market's slightly overextended at the moment, and it's going to pull back, then there's no reason for it to show strength here. Not if it's had the ability to already take liquidity. Yeah. So getting back above this area would be a sign of strength, meaning we could then look more favorably towards long positions, which we would obviously want to frame on a higher time frame here. We also need to be aware that this could just be price, framing this on an intraday perspective. Let's take a look at what's happened. We had obviously that massive move here, gapping up through Asia. Markets kind of come back in. London continued the risk bid here on the NASDAQ. We see that moving up. So now we're in the New York session as we move towards 2:30. If I wanted to take a play on this, I've got an expansion leg here, a brand new expansion leg from this low to the high. I normally like to see a little bit more displacement, a little bit more gapping here, but there's a really nice gap here. Where am I looking? Below the 0.5 and in and around the golden pocket. All right. So this could provide a really nice area. That's the area I'm going to be looking to today in terms of intraday trades higher. I normally like to let Monday play out anyway, set the range for the week, take a look at what's going to happen, digest the news, and then come in live with the sessions on Tuesday. But looking at that purely from this perspective, that's the area of interest for me. Price drawing down, holding this area, and then looking to take the bids higher. So hopefully that was interesting anyway on XRP. We're just going to now move across. We'll go to ETH and Solana. If you guys do have any instruments, tickers that you would like me to take a look at, please do just let me know in the comments, and I'll do my very best to take a look at them before the end of the show. So let's go back to ETH, shall we? Let's take a look. For those of you that are maybe new to the show as well, we use these crypto charts, right? So the reason for that is just through all the live shows, through everything that we've done for years now, these are all the TA on these remains on the chart. Some of it will become clutter, in which case then it will be announced live on the show before anything is removed. This is an ongoing journal of the TA that we cover on this show. All right. So I'm going to hide this Fibonacci for a second and bring it back in a minute because it's a lower time frame. So it's just a little bit muddied up on the chart. This gap here, this monster gap, we're going to look at all these plays in the lower time frame in a moment, but ultimately remember the same things we're talking about here. This was the key point of resistance that we were looking at. This is the area that have been actively adding to ETH. I did so here as well. We've now had the expansion above. When we kind of started to see these rejection wicks, my expectation was price to draw back to this gap here and move up. The fact that we're sticking to this level shows me like a lot of conviction from the buyers, actually. I give this brilliantly awful analogy to some of my students. Other people that have worked with me over the years will say that I become famous or infamous for them, which isn't blowing my own trumpet. It's not a good thing to be great at telling shit analogies, I suppose, but it's because I think of them on the spur of the moment, and sometimes the worst ones can stick in your mind. But think of it like a pot of boiling water, right? Now, if we're looking at these, for example, here, when price came in and took out this high, look how quickly it moved in and then moved away. So think of it like putting your hand, you've got two pots of water in front of you. You don't know which one, but one of them has boiling hot water, and as soon as you put your hand in that, you are just literally going to rip your hand out and go, geez, that's hot. I can't keep my hand in there for long. Same thing happened down here, right? Now, if you're looking at price kind of coming into levels, this isn't maybe the best example here, but price kind of coming in here, or even better, look at this kind of example over here. Price came into this low and just gave so little care about it. Look how it just plunged its hand in really deep and then just continued its way down until ultimately it got to a point down here where we see the start of that recovery. Price dipped into this level and shot away from it quickly. Why did that happen? Well, because the buyers are stepping in aggressively. Like, this was just obviously really, really good value for ETH. A lot of people were willing to buy it here. Why was this a really good area? Why do we cover this area so much? And my good friend Razoon, who's also part of my trading team over at the Bird Nest, will tell you these consolidations that lead to large moves are often very, very good places to look for buying opportunities, as they are in reverse. When you see these areas lead to sell-offs, it's the classic idea of supply and demand, right? Now, what's really interesting about this is just look at these weekly candles, just all these dojis, just prices chopping away in this consolidation. Could be a bull flag, could be a bear flag, right? Ultimately, we assume it's a bull flag because it's come after a large expansion to the upside, but we're still stuck under this area of supply, right? This order block here. So I'm going to move to a daily just to kind of look at a bit more of a granular view on this. Yeah, sure, Chris, we'll take a look at that for you, mate. You see all the colorful bits and pieces coming on here. So what we're going to do is, first of all, we're just going to clean this chart up. Yeah. So we're going to look at this here. And we're going to say, do we need this on here now? No, it was on there. We closed below it, acted as resistance. It sold off. We don't need to keep things on the chart to pat ourselves on the back. We can see it in previous episodes if it is something you want to study. But ultimately, this is the pure example of why these inversion gaps work so well. They're expected to support price, strong close below it, look for it to be retested, target the next key liquidity below. So we're going to get rid of this now just to clean the charts up. All right, guys. Now, bearish gap here. What did that do? We didn't invert it, right? Price drew back into here. We knew we had the inversion back here as well. We expect this to be resistance. This is where we sold off. All right. Now, what's interesting about this here, I'm going to leave this green one here because I assume that's going to be something from the 4 hour, is that we've now inverted this over here, closing above it. So we then expect this area to hold. So we can now get rid of this as well. It did its job really well. We didn't invert it. We don't want to try and be too smart. We just want to say to ourselves, if we see liquidity lower and we're holding a bearish point of interest like a gap, or we swept a high and see the strong reaction lower, then we look for liquidity targets lower. All right. At the moment, we've seen this strong expansion higher. And lo and behold, what's holding price absolutely to the dollar is this. Bearish gap, price closes above it. Inversion gap. I know I sound like a broken record, guys, here. I do try and keep these things quite simple because there's so many complex things to decant in the market. And ultimately, technical analysis is a tool for us to be able to really understand where the right places or where our preferred places to buy and sell are from a perspective of risk management. Ultimately, we are all risk managers in this game, and the very best risk managers are the ones that come out ahead. It was, Larry Williams, one of the greatest traders of all time, won multiple winners of the Robbins Cup, and I think still holds the record for the percentage that he won that by. That is the World Cup of traders. And somebody said to him in an interview that I saw once, you must be one of the greatest traders of all time. What's, your secret? What is it you look for? And he said, I'm actually not. He said, I'm really not an exceptional trader. I'm not, one of the best traders. He said, I am an exceptional risk and money manager. And there's something in that for all of us to understand, especially in cryptocurrency, right? So anyway, I like sharing that anecdote. I think it's such a potent and pertinent lesson. So this is what we were looking for here, yeah? What did we do? Price came up here. We were looking for reactions at this gap. Did we get them? No. So what do we do with this? Just not relevant now. We've closed down below this. So now, what are we doing? We're going to get rid of that. This is actually from the 4 hour, right? So when we look at this here, there was actually this bullish gap here as well, right? On the daily, we just slithered underneath this here, but we don't mind because we've got the inversion here. And look how the body's held that perfectly. So ultimately, like I said, until we close below this, we would invalidate this and we would validate this inversion. Then we would look lower. Until then, let's keep it simple. If the risk bid is in, if the markets look healthy enough, if they're digesting the geopolitical situations, and we're not seeing that massive impact at the moment, then we want to just stick with that bias to look higher. I'm just going to get rid of this now because, as we said, we've understood its purpose. It's played its part. We're now reacting at this level. This is the most current thing. Closing below this would invalidate this setup for me and then would have me targeting these lows and ultimately further down towards this gap should price action suggest it, combined obviously with our fundamental and news drivers. What's quite interesting here is we've had this lovely expansion high. If we take our Fibonacci out here, we can see the low to the high of the move. We held the beautiful area here around the golden pocket on the 0.75, a little bit deeper, but the long downside wick showed us that buyers were willing to step in at this level. So yeah, again, we now look for that to push higher. I would need to see a move lower to then draw my fib from the high to the low here, because I would want a new leg of price action. So what do I mean by that? I like to see legs that have taken liquidity on both sides. So even this one here, I don't mind now, even though we didn't have displacement or what I would call a true impulse move, which is where I'm looking for gaps to be created. If we look at what happened here, what did we do? We swept liquidity from this low, yeah? And then this here took liquidity from the higher. We get rid of those at the moment. We now have a new range to consider here, and this is where our Fibonacci's can help. Yeah, because remember, this is the low, that's the higher. Two areas taking liquidity. We look for price to draw back down below the 50% or into our golden pocket or hold the 0.75, and then we look for the reactions on the lower time frame as to how price is reacting at those levels, as if buyers are stepping in or if sellers are defending the position. The best legs for me, though, ultimately are these. And the other way we can use these, because look at this low to this high, there's a massive expansion here on ETH, really, I think probably sidelined quite a lot of people. We can see from our TA here, it didn't catch us out. We've got some really nice long trades here on ETH following these same principles. But look at this, right? We're looking at this here and we're saying, okay, well, we really ideally just wanted price to just dip down a little bit lower towards the 0.5 of the retracement. We saw this beautiful expansion, price coming down. See how it basically got stuck? Yeah, at like the 0.25. If we use like a classic fib here as well, let's see. And we put on our 236 and 382. You can see how well respected these levels have been. Yeah, so just remember, focus on this. This is the high that we're looking at. So we're looking for price to retreat down here, and look how the 382 price has dipped into this level. It's showing us normally real strength in a trend. If you're holding these upper levels on the Fibonacci and not getting down to the 0.5. But that didn't ultimately play out. We saw price just kind of have all this sideways action, which we've been grinding through here. So anyway, long and short of it is still feeling bullish here on ETH, right? So again, here I'm looking for conditions. We can see this kind of gappy move lower. I've got the daily in here supporting this, right? So I can now focus a lot more on this. It's a little bit messy in here, but there's these overlaid 4-hour gaps. So the gap between this wick and this wick, and then this wick and this wick here. So if I'm looking at this now, I'm saying, okay, well, what have we done? We failed to take liquidity below this low, which I would have loved to have seen, but we have really started to have this expansion move now. So if I'm looking at this, we've shifted structure to the upside, right? This is interesting because we can look at this one of two ways. I'm looking at the immediate expansion leg here because we're bullish on the higher time frame. So any retracements down to around these levels, especially this gap, could provide really good buying opportunities. The other thing I'd be looking at, more so if it was aligned with our bias. So if we were bearish at the moment, I'd be drawing my fib from high to low, looking for price to engage the 50 here or the golden pocket for moves lower. However, I'm favoring the short-term bullish move here because we're holding these daily levels. So on ETH at the minute, until proven otherwise, unless we break back down, looking to kind of support short-term the risk bid. Now, I'm talking about this much more from a short-term trading perspective, mostly intraday as well at this stage, just remembering the key and potentially volatile news drivers we have coming up this week, as well as developing news geopolitically and in the nature of tariffs that we can't really kind of, well, it's not scheduled news, is it, right? We have to, it's reactive news. So ETH, I think, still looking pretty good here. If we really start to tank, then obviously it'll be a slightly different story. Let's just flip back very quickly to the NASDAQ chart. We can see, slight pullback here on the day, but ultimately still looking nicely bullish overall, holding the upper quartile of the range here as well. And again, if we put that onto a traditional Fibonacci, we would see the 236 and 382 come into play here as well. So, pretty benign. We haven't seen that big flush on risk at the moment. Let's see how we kind of how this play develops throughout the day. Now we're going to take a look at a few others on here. We covered Ethereum. Let's take a look at Solana next, and then we're going to also take a look. We're going to finish off on VET for our friend Chris here. So Sol, let's go across to our crypto chart here. Looks like a real mess here on the weekly, doesn't it? Just because of all the annotations and that, but they will really start to make more sense as we move down. However, price still being capped by this weekly gap here. Yeah, we saw an immediate reaction from that there. So look, we just listening to what price told us, we saw a reaction down here. Fine. Failure to get acceptance above that level, not really being seen as value up there at the moment. So probably going to draw back to a previous place that it was considered value. So we look at the down close candles here and say, okay, if this is where the sellers tried to step in here to get the market down and regain control, and then just got obliterated here by the buyers, this does a few different things. It means when price comes back down to this area, anyone holding through drawdown on any shorts can mitigate, close those positions out, and then look to jump on board with the trend that's establishing to the upside. So that's what we're kind of looking at here. We need to just extend these out a little bit for when we look at them on the lower time frames. Right, we kind of leave that there at the moment. We're going to look at this a little bit more. But on a weekly scale, what are we doing? Well, one of the really interesting things here is we did close below this weekly gap. right? We've already covered that on a previous show, so I won't go into that too much here. But then the doji candle of last week didn't really give us much more to go on. We're looking for these equal lows to be run down here. They didn't quite get there. The daily, I think, will kind of show us a little bit more. This is on the 4 hour. We'll look at that in a minute, but we never got the setup to the upside we were hoping for around here, holding this gap, bullish breakout, invalidated. So we were looking, as this arrow shows us here, to trade this lower. Now we got to our initial targets here, right? We never took out these lows, which really, really surprised me, until over here, right? We then came out and took out those, but we left this one intact. So again, we can see arguments for trades both ways here on the market. Now, unlike ETH, this looks a little bit more bearish to me here, yeah, because we can see quite clearly, you know, this is what's holding the market at the moment on the daily scale is a big bearish gap. Price failure to take any liquidity from the lows down. Well, it did take liquidity from this, but left more obvious lows below it. For me, I would be looking at the moment if it aligned, you know, certainly from a news and fundamental perspective here, if we start to see weakness, I think this area is probably quite good to look to jump on board. Some short trades just down into these areas here. I think a little flush lower before a recovery makes sense. But again, you know, really nice, clear and obvious gap here. What we need to see to invalidate that? Well, we would need to see price close above this on a daily scale. All right. Now, again, yes, we've got bullish news drivers. I do understand that we've still got liquidity resting below here. But for me, in terms of market structure and displacement, this is still the more prominent of the moves, all right? Because remember, on ETH, the reason we were taking our Fibonacci from here to here was because we were looking at this on the terms of, okay, we're holding key support, price is looking to move up, we're looking to regain structure. Here, this is kind of more bearish. So if I'm looking at this, I'm saying, okay, well, high to low of this move, that's the displacement leg. We're in and around the golden pocket here. If we start to show strength up into these areas and start closing candles in here, probably an indication that price is going to look for liquidity higher, which would be, you know, this higher resting up here. If price obviously starts to break down more so from here, if I wanted further confirmation of that, I'd be looking to this gap. All right. Why? Because this is a bullish gap that's here. We've seen the initial rejection at key levels. Price has drawn into this once already. If buyers were strong here, I wouldn't expect price to necessarily revisit this, but I would give it another couple of candles. Price closes below this here, then we've got a ready-made low sat down here at 148.24. And then this cluster of lows that takes us right back down to the equal lows there. So feeling a little bit more bearish than bullish here at the moment on Solana, but only marginally. Ultimately, if the risk bid really does hold and underpins the market foresight for the week ahead, then, you know, these things do stand a very good chance of having a run. Let's take a look at VET for Chris. What have we got here? Where is our... Here we go. Right, nice clean chart on this one. Let's really kind of zoom out. I mean, really just holding just down at the lows here, isn't it, VET? So I think, you know, good fundamental drivers and bits and pieces behind this. This is the kind of thing that could really look to catch a bid. This is a nice level through here, actually, if we take a look at that. Just any kind of key and obvious areas. I typically look for like wicks or bodies to really kind of give me an indication. Just I looked at this area as a key pivot, look, because price broke above here, and it's the origin of this massive move. So was there a key support resistance flip? And in my opinion, yes, there absolutely was. This low that was here, price sold off below this, retested it here, rejection here, closed above, beautiful long downside wick in here. Price then looking to absolutely rip to the upside. So when we got back down here, no secret that this was a good place to look to add some positions if I was looking at this, especially from a spot perspective. Still quite like this level here. Again, a little bit like what were we looking at this on? I think maybe earlier when we were looking at Bitcoin or ETH, we saw that price hadn't really come back into this key area of support. It was showing a lot of strength above it. So if I'm looking at the area here that I think is kind of capping that, you know, it's probably realistically, if we take it from the lows of these across to here, something like that. I'm kind of holding this area of absorption here. I think, you know, price kind of comes back into this. Would love to see it come down and kind of take out this low, just so that we've swept some liquidity. So something like this, right? I don't know if this will work on a weekly. The drawing tool's normally hideous, but oh no, that's right. So yeah, something like this. get back above here, re-establish market structure, and then boom, we're away. Dip into this, fast recovery of this, retest of this area, and then on a lower time frame, we can look for those type of patterns to trade this higher. Apart from that, really, on a weekly scale here, I'm not really getting too much from VET. So let's look at it on a daily. On the daily, we have taken some liquidity. Now, this is key, right? Just looking at how price has reacted. Now, this isn't a particularly key low in any way, shape, or form. It's not an external low, right? You know, it's just in this process, price came up, shifted market structure here, found support back down at the area of demand, this order block here before that nice expansion leg higher. So again, you can look at that and say, okay, well, this was kind of the origin, or this is here. We're now back in this area. So it makes sense for us to find support here. It's been an okay reaction so far. You know, you normally like to see, or I normally like to see anyway, when you're dealing with a high or a low, this is a good example here, right? Look at the strong close above that. I'm then looking for any pullbacks here to continue long into the next key highs or lows versus the reaction we got when we came up to this high. Yeah, long rejection wick back down, price tries to get back above it, bearish engulfing candle, clean low to trade to, inefficiencies to fill. That's where we can jump on and start to take some short trades. As this holds, obviously on a daily scale, this is still bearish, lower lows, lower highs. Tried to make a resurgence here, is now really kind of dived down into this area. We've got kind of multiple overlapping gaps here on a daily scale. So again, I'm going to just do this in red so we can really signal that this is an area of resistance. So, you know, we're not really seeing that follow through at the moment on VET. So until we kind of close back above this here, and then I think we can have a massive run on this up to kind of starting around about 0.028636 here, where we can really start to take that pump. But I really want to see that inverted first on a daily scale. If I'm looking to be a little bit more aggressive with this, and I think, okay, I got the fundamental drivers behind me. I'm looking at this and saying, I think there's many reasons that VET can kind of go off today. And my job as a technical analyst then is just purely to find the best places that we can get involved in this move from a risk management perspective and to maximize our return on risk. I haven't got anything particularly clear here on the 4 hours. So this is maybe a good example of where I would then look to kind of move to a 1 hour chart and say, okay, do we have anything? Even here, really, it's very, very balanced on the way up, right? So I can do one of two things here. I can say, okay, this hourly gap here, yeah, we inverted the gap here, closed below it. What's our assumption then? That price draws back to this gap and then seeks liquidity lower. We have a slither of a gap here that's now been rebalanced, yeah? So if we're jumping on board the short train at the moment, then we want to be looking lower and saying, okay, we've got this low here that's within this gap. So that becomes a really nice target at 0.022314. I think breaking down in risk across equities, across our indexes today, could really kind of lead to a bit of pressure on crypto. So this is going to be a really good level here. I think that's a key draw if we're looking on the lower time frames on VET. But ultimately, looking at this from a positional perspective, I'd feel a little bit safer above here, or happy to take any real kind of drops down into this support area. It's just been a really good kind of accumulation zone. Yeah, we can see that even from these kind of moves here with good risk management, you're up on a lot of these plays, whether you're holding or you're shedding some of that as you move forward. It can be really, really interesting. So let's just finish up very quickly back on our NASDAQ chart. Expansion kind of taking place here, price then moving higher again. Let's take a look at where we are here. Yeah, price kind of moving up here. We've got our target set at 22,074. Still within this large bearish gap price. So this for me could still present a good opportunity to short this down into resting liquidity as price is kind of continuing to pump higher and just looking for those opportunities. If I want to get involved here on the bid, I need to be doing it from a position of strength. I know price is rebalanced up to here. So if we take a look at this, I would probably favor this area here rather than the underlying gaps underneath it, because large bearish gap, rejection here, failure to respect it here, strong close above, retest of this area. Yeah, I think that's kind of underpinning the push higher here at the moment. So really keen to see how price reacts at 22,074. Chris B, you're very welcome, mate. Very, very welcome. So we'll keep an eye on that. Let's keep an eye on news developments as well, obviously, as they take place. Update here from Reuters as 2 minutes ago, S&P 500 index looking to get back on track. They're talking about that in the context of last week's sell-offs, I think, based around, obviously, the very sad escalations between Israel and Iran. And then US stock futures rise with focus on Middle East tensions and the Fed meeting this week. Could just really put us in a few days of chop here, guys, while the market starts to work all this through. So, as always, we have our plans. We're going to be prepared. We know what we're doing. Aggressive intraday plays holding above here. We're going to look at what the reaction we get is up here. Appreciating all the time that we're still in this higher time frame area of resistance. Okay, so a move down here will be felt even more so in the crypto markets. All right, so actually finishing bang on time today, 1400 here. I hope you guys have enjoyed the show. Please do hit the likes. Give me a follow over on Twitter if you're not already. I do post a lot of content over there. You can find me on this handle. If you have any interest in learning more about the Bird Nest or any of our partners, you can find information down in the description. Aside from that, I'll be back on Wednesday for our alt request show. And for any members that are with us, we will be on our live trading show tomorrow as well from 12:15 UTC. All right. Have a fantastic week ahead, everyone. Trade safe. Do keep an eye on the markets. And I look forward to seeing you all around the nest.